Right. Central Bank Governor Lamido said that despite the sustained decline in inflation, the monetary tightening cycle is not necessarily over, adding that headwinds in 2014 prompt caution. And joining me to break down how the MPC stance impacts fixed income securities going forward is Emmanuel Odiaka, a fixed income trader at UBA. Emmanuel, thank you very much for joining us. And I just want to get your take on Sanusi's comments about the tightening cycle. He says the tightening cycle is not necessarily over. Now, with the central bank governor putting that out right now at the end of the year, how do you trade into next year? What is your approach to trading in the fixed income market?
Thank you, Wale, for having me today. With the committee's outcome yesterday, it's important to know the committee's mind towards the outcome of next year monetary policy stance. And one could easily see the committee signaling to the market its intentions to maintain a contractionary monetary policy going into 2014. And this could be hinged on the point that the committee still expects the U.S. Federal Reserve to taper with quantitative easing program next year. And with the run-up to 2015 general elections, where the committee posited that government could be spending funds, I think invariably the committee is looking at maintaining inflation balance and present monetary policy environment.
Right. So with that in mind, how do you trade in this market? I hear right now that investors are more skewed towards the short end of the yield curve because of that stance.
So would you mind take that a little bit?
I'm hearing that traders are more skewed towards the short end of the yield curve because of the monetary policy stance. So your take on how to trade into next year? Hello, Emmanuel,
you may have to take that again. It's a little bit faint.
Oh, okay. Okay, let me try again. I'm trying to get your thoughts on how to trade in this market going into 2014, given the current monetary stance of the MPC.
Okay, thank you, Wale. Going into 2014, obviously, like we have always said, quantitative easing, tapering is going to occur. One could easily say that the CBN Monetary Policy Committee stance has been contractionary, like I had mentioned earlier on. And I think going forward, dealers would have their eye, especially at the short end of the market, as against betting security assets at the longer end of the curve. This is owing to the obvious fact that we are going to see a yield spike next year. Whether it will be first quarter or second quarter, that is left to be seen.
All right. So let's talk a bit about something else the MPC put out there. The treatment of the AMCON bonds. About ₦1 trillion of AMCON bonds are going to mature in December, and they, of course, rather are going to be redeemed by AMCON at the end of December. And your take on how this is likely to impact the market going forward?
Yes, well, talking about AMCON bond, this has been a recurring decimal in market analyst view on the likely impact the funds is going to have in the market. You recall that AMCON earlier this week had hinted market of its intention to recall its Series 2, 3, and 4 tranches, which amounts to about 2.99 trillion. And also, market is expecting about 1.9 trillion to mature in December 30th. However, from what we heard the central bank governor mentioned yesterday, this will be taken care of by the central bank, although there's a salient issue there, which seems to me that the AMCON authorities and the committee has remained a little bit salient on. And this has to do with the instrument, which is the federal government bill, like they mentioned, that will be issued to market. However, market is skeptical on the tradability of this bill, and that will be left to be seen in the coming days ahead.
All right, we'll see, of course. Clearly, they will need to provide more information to AMCON bondholders. So let's talk a bit about the T-bill auction. I understand that auction was held today. Do you have the results, and what can we read from these results, given the current monetary policy stance?
Pardon, Wale, you may please have to repeat that.
Okay, one more time. The T-bill auction that was held today, can you just give us some insight into the results, if those results are out now?
Okay, yes, there was a TB auction today where 91, 182 and 364 papers were issued to the market to the tune of 20.6 billion, 25 billion and 54.9 billion respectively. Going by present liquidity environment in the system, it's not uncommon and surprising to see that there will be pressure, especially at the short end of the curve. However, from result thinking into market now, we hear that stop rates may be at 10.7 for the 91-day paper, 11.45 for the 182-day paper, and 11.649 for the 364-day paper.